Good day once again. Just a quick one. I'm sure 15 minutes we do for this lesson. Okay. The biggest problem that some of us have as a trader is that we buy where we are not supposed to buy and we sell where we are not supposed to sell. Okay. And when I look at this, I check and say, oh, cool. I need to show these guys concept of premium and discount. Concept of premium and discount. In every move you see in the market, whether down or up, it has, three sessions. EQ session, premium session, discount session. For sell setup, the same thing is applicable. Remember, this is sell, this is buy. Okay? Equilibrium, EQ, premium, and discount. All right? So, what do I mean? From, let's say for a sell, this is sell, a sell move. Okay? And you have identified that this is a single wave. Between this level in the middle and the lowest level here, you have the discount. Between this medium level and the upper side here, you have the premium. And since this is a down move, when market is making a retracement, if the retracement is still below this equilibrium, do not sell. No matter how beautiful the sell setup is, do not sell. Let me repeat myself. Let me clear everything. I will do it one after the other now. This is a sell move. This is equilibrium. This is between here and here. Between this level and this level is the premium. Between this level and this level is the discount. Okay, this is the equilibrium. Okay, now you know that after making this push, this market will attempt to make a retracement. If the retracement is still below 50, do not sell. If it's giving you a sell opportunity, it's called inducement. Inducement. It's inducing you to sell at this equilibrium level most of the time, whereas it's still going to go up to premium. This is part of the way you are rigged out of the market. Everybody is rigged out of the market because of this. This is the sell zone, which corresponds to the premium zone. Is that okay now? Never sell below equilibrium in a sell setup. Wait for market to hit premium before you sell. The same thing is applicable to a buy move. If you see this move as a buy, you have the equilibrium here. You have the discount right here. Between this level and this level is the discount. And between this level and this level is the what? Is the premium. Okay? And of course, you know, for a buy trade, the market will attempt to do what? To retrace back here. If the retracement come here, okay, retracement come to the middle here, do not buy. Do not buy. I repeat, if retracement come to equilibrium 50%, do not buy. Allow it to come down below 50. That is the discount. That is where the market is well discounted. And let me tell you the implication. If you buy before the market comes below 50, undiscounted level, the implication is that the market is going to find a bigger opposition to your buy. Because you are trying to buy within a premium level. So there is greater resistance to the push to the upside at this zone. But when market has come to this zone where discounted, the resistance to buy here is low. So if you want to buy here, it's easier for you to get it, for the market to give you the buy. It's resisting you less here. The same thing is applicable to if you are selling. If you want to sell, if you are selling, this is a move, boom, boom, to the downside, the market retraces right here. If you are selling here, opposition to sell is bigger. At any point in time here, the market will rig you to the upside because there is opposition to sell, because you are selling within a discounted zone. So you need the market to come to where? To the premium zone where it will find least opposition. There's going to be what? Least opposition to what? To sell right here. Do you understand? Now, let me give you example. Let me give you example of what I'm telling you. Okay, let's stay on this pair, GBP USD. You see that the last major move for GBP USD is a move to the downside like this. Okay, so if you take a fib of this move to the downside, what do you notice? Okay, you want to mark your level of premium and discount. This is equilibrium, but let me give you an idea here. Usually equilibrium is at 50, but for me to guide myself well, I use premium between 62 to 69% fib retracement. I don't want to get involved at less than 62. Do you understand? Or 61.8. I just approximated it. There is nothing special in 62. Okay. And then between this 62, okay, and below, the market is at discount. So what does it tell you? What it tells you is that when market was here, we could buy. When market made this pullback, we could look for buy opportunity, push up, break structure. When market came here, we could buy. Why? Because we were essentially within a discounted zone. Okay? But as soon as market got in between this level, you cannot buy again. Okay? You cannot buy again. Why is it that you cannot buy again? Why? Because you are within a premium zone. You are within a premium zone. This is the zone where you will be looking for sell opportunity. Now, how do you look for the sell opportunity? That is the question now. Now you are in a premium zone. Look, in a premium zone, the market can give you a buy setup. It can give you a buy setup. Don't misquote me. You can get a buy setup, but you must learn to take your eyes off such buy setup, because you must have a system that tells you that you should never buy within a premium zone and you should never sell within a discount zone. So since most of you are intraday trader, you can, if you are using 4 hours as your higher time frame, then this buy setup you are seeing here is in a premium zone. So as a result, you are not going to buy. You are not going to buy. So what are you going to wait for? Since you cannot buy here, what you are going to wait for is simple. You are going to wait for this market to break to the upside. It can even correct, break to the upside. But the time is coming, guys, you are going to have internal break of structure. This low here is going to be validated. And that is the point that you know that you have been waiting within the premium zone and the market has given you a signal that is now about to sell within the premium zone. And that is when you will now activate your entry strategy by looking for this to pull back to premium. Of course, you know, this is also an impulse that has equilibrium, that have premium zone, that have discount zone. Make sure this pullback comes to where? Premium zone. And when it gets to premium zone, what do? Let it go to the downside. You can even go to as low as 1 minute, look for the impulse, let it come to another premium zone again. So meaning you have watched your premium level at H4 time frame, you watch premium level at your entry time frame, which is 15 minutes. You are watching a premium level at a much more lower time frame. This is how you do it in such a way that in each time you enter into such trade, the worst you can get is a break even. It's a break even. Let me give you an example. Now, I just told you we're in a premium zone, and then I went to 15 minutes this morning for this particular pair. Okay, I look, though I expected this to come over here, but at a time I was looking at this to be the impulse that will give us the move. Okay, so right here it has come to my premium. When you take the fib of this leg, you are right in a premium zone. Can you see? Can you see how we do it in a premium zone? And within the premium zone, okay, within the premium zone, I saw this happen. Okay, I saw this move. This move, I look at it, this could be a break of structure. I will want this correction to go to premium again. Can you see how I'm doing it gradually? It came right to premium. Okay, and then from here, I executed a sell. Can you see? Minimal stop loss, boom. Expecting this to move to the upside, and it pushed and gave me how many pips? How many pips? Boom. Between here to here, 28 pips. After 28 pips, it made a move to the upside, but we moved our stop loss to break even. So because we break even, we did not lose money here. Okay, for GBP USD. So the worst you can get in the market is a break even, because you are observing concept of premium and discount. You are observing concept of premium and discount. Is that okay now? Let's go for another example. Okay, let's look for USD card. Okay, now in this USD card, let's assume we are looking at this present move to the upside. Look at break of structure, pullback, move, pullback. So let's analyze each of the move right here. Let's analyze each of the move. If you take a fib of this leg to the upside, you will see right here that this market did not come down to premium to discount level between 62 and 79. It didn't come there. Therefore, no trade. This buy to the upside, you will have missed it. No trade. Okay, this is the discipline you must inculcate. Look at this leg to the upside. Can you see that right here you have the market come to you, to your discount zone? Okay, and watch me do something. Because in 4 hours time frame, it has come to discounted zone between 69 and between 62 to 69. You go to 15 minutes time frame, you see the move that emanated from that zone. See that move, then allow the pullback to come to discount. Where is the discount? Make a fib of this level again. Can you see where I mark it? Correct. This is your entry. Boom. Can you see? 4 hours time frame has retraced to discount. 15 minutes time frame has retraced to discount. Therefore, you have your entry. Right now, I am on USD card. Okay, but I couldn't give this trade out at the time it happened because, you know, I didn't give it out at the time that it happened because it was too early for me to give out a trade. Too early, 9 a.m. And moreover, this pair is a New York pair. I did not want to give it out in London. That is why it's only me that is taking this trade. I did not give anybody. Even in my Signal channel, I didn't send it there. It was too early. Anything could happen. So I could afford the risk, but I cannot accept the risk for majority of the people in the Signal channel that will take the trade. Because if I lose a trade, I can imagine how much I'll be losing in total in the market, because many people are taking the trade based on my own advice. So I'm very careful. Okay, so you can see it's running perfectly. How did I get this? Okay, concept of where premium and discount. Do you understand? You can see that we did not take this one. Why? Because it did not come to discount. It did not come to discount. It's as simple as that. Can we take another example? Yes. Yes, we can. 4 hours. 4 hours. Okay. 4 hours. Look at this move, guys. You must look for a strong move. Look at this move, broke structure, pullback. Okay. Look at this move, broke structure. Take a fib of this leg. For instance, mark out your premium zone. Look at it. Between 62 and 79 is your premium zone. Okay. After marking it up, go to 15 minutes time frame. Okay. Go to 15 minutes time frame. Okay. Can you see that market got to your premium zone? Okay. Making high and break structure here. After this structure is broken in 15 minutes time frame, go and get your fib. Okay, you have to allow the market to come back to where? Premium zone. Look at it, coming back to premium zone. If it doesn't come back to premium zone, that is not your trade. That is not your trade. That is not your trade. Can you see? It is back. It is back to premium zone. Boom. And we can refine this trade better by going to lower time frame. That's when you now see you have impulse, you have correction back to where? Premium zone. So if we had to take this trade, this could have been our entry. This could have been our entry. Boom, to the downside. Do you get now? So it's as simple as that. This is how you implement discount and premium. If you want to buy, if the market gives you impulse and does not come to discount, do not buy. If you want to sell and the market does not come back to premium, Do not sell. Then somebody will ask, what is discount? What is premium? Discount is a pullback below 50% retracement. When you have an upside move, okay, you have a pullback that is below 50 here, between 62 to 69. This is the right place for you to buy. When you have a sell like this, premium is when it's pulling back. If it comes to 50 like this and it's coming down, do not sell. This is what is called inducement. Inducement. It will see come up here. This is where you should sell. Okay, for those who enroll for my coaching class, they know what to do if, because it's a theory I've developed, that if there is rejection from a premium level, okay, back to the discount zone of the leg that formed the move, that is a comfortable buy to the upside to break the inducement level, to break it to the upside, and you catch it as supply. Boom. It's a theory already. Okay, and it works like magic. I wish what do you call it? I wish I can get an example. Which trade did we take? Okay, I didn't take it, but I analyzed it for you over the weekend. Euro AUD. I told you it was going to go back to the upside. Can you see? Yes. Can you see? Yes. So right here, we have this. No, wait. Let's start from here. You have this move to the downside. I told you, mark out the premium zone where you have possibility to sell. Okay, mark out the premium zone. So you have possibility to sell here. But now, you now see the way the market came up very strong to the upside. And it started rejecting here, rejecting here. So this has become a zone of inducement. Inducement. The market is inducing you to sell, whereas it still wants to push up. That's why you see I mark this level there. Okay, so when there is rejection, when a strong move comes to inducement zone, where is the strong move that comes to the inducement zone? Look at it here. Boom. When a strong move comes to the inducement zone and it's rejected from there, corrected to 62 to 69. Where is it? Corrected to 62 to 69. Let me mark it for you. 62 to 69. Can you see? It has corrected to this level. Is going to make another push to the upside that will break the inducement level. That's the theory. That will break the inducement level. Okay, and based on that, you can take a sell at that demand zone or discounted zone. Okay, and based on that, if you go to lower time frame to find an entry, you are going to see a break of structure and correction. Okay, I'm going to see break of structure and correction. Okay, for my students, we enter our trade on 1 minute time frame. Okay, 1 minute time frame. If our stop loss is more than 10 pips, we are wrong. See the move? Okay, now this has taken the liquidity right here, and you have a move that breaks the structure. Our correction back to discount is our entry. Is our entry. Can you see? Boom. That's why you see this. I didn't take the trade. I did not take it. You see this is moving slowly and gently to the upside. And gentlemen, ladies and gentlemen, it's going to break this level. Okay, it's still telling you that I can recognize that this level is an inducement level. No problem, no problem. Boom. It's coming here. When it gets here, move to the downside. Can you see? This is how you're going to apply concept of premium and discount. Concept of premium and discount. And you can see it everywhere. Everywhere. Okay, let me see if I can get another example. Yes, you can see this move to the upside. Make sure the move you are considering break structure is very important. Okay, for those that are in my coaching class, they understand the condition for a break of structure. Okay, they know how liquidity should develop. Okay, for them to know that this is a true break of structure, and they know how it should retrace. Okay, so right now, if you take a fib of this leg to the upside, okay, mark your discount. Can you see? If market doesn't come to your discount, do not take the trade. Okay, now we have additional confirmation right here because we have area of equal low, okay, that is taken to the downside. So this has given us additional confirmation because we now have a level that we expect the market to return to in future, and then you can take your trade from here to the upside, and when it's returned here, you can also buy to the upside. Okay, but when it came here, it left level of liquidity right here again. Can you see equal low that the market need to take? Once we see it this way, we don't take a trade here because we knew that this is going to come. Okay, but after this comes and you have a break to the upside, then you have a break of structure. Okay, this is a grab, liquidity grab. If it runs to that level sharply and it runs out sharply, it's a liquidity grab. So any corrective structure back to discount is your trade to the upside. But unfortunately, this does not give us discount. Okay, this does not give us discount. Where is discount here? Look at discount here. Okay, when it comes to advance, I will now tell you the condition that will make you to buy, even though it does not give you discount. But for now, please and please and please only buy at discount or at premium. When you come advance, I will tell you, even if it is before 50 here, I will tell you the condition that will make you to buy, even though it does not come to discount. But for now, let it come to discount. Is there any question, guys? Is there any question? Is there any question? No question?
Hello?
Yeah? I'm hearing you. Any question?
Okay, yes, there is. The question was supposed to be in the last class.
Okay.
But just that I didn't know I could do it. Whether I should quickly ask, sir. Sir, you said something about level around like the zone you mark now. You said something in the last class about the zone.
Okay.
I forgot the word I used. I'm trying to remember that word.
Which zone? Which zone? Which zone?
Zone around your level, like the level you're marking, so between 62.76.
Okay.
You say you trace price, where price is there's a word you use.
Discount?
Like a round figure. No,
okay.
Like a round
psychological level.
Psychological level, yes.
Okay.
I don't know. Can you expatiate more on what psychological level should
Psychological level is nothing but just a whole number. Like for instance, in GBP USD now, if you have 1.4900, can you see it's a round figure, 1.4900? That's a psychological level in the market. Okay, when you get to another 50 pips, when it's added, 1.4950, this is a sub psychological level. If you get to 1.5000, okay, 1.5000, that is a psychological level. These are levels that bank place their order. Okay, so market tend to react when they get to this level. Okay, so when you analyze the market and you see that your analysis shows that this market is going to buy, is going to turn at a certain level, and you see that that level corresponds to a psychological level or sub-psychological level. Is an additional confluence for you to give you assurance that this, your setup, is going to work. Okay, it's going to work. Do you understand now? So it's, it's an additional confluence in the market. Psychological level, sub-psychological level.
So in essence, are you saying psychological level is a level with a difference of 50 in the market?
Whole number 1.4900, 1.5000, 1.5100.
You're talking of 50 apart.
This 50 apart, no, 100 apart is psychological level.
Okay, when then the sub.
When you now go to the middle, 50-50 is the sub psychological level. I get you now. Thank you, psychological level. Yeah.
Thank you, sir.
Another question? I have 5 minutes more to spend. Another question?
Well, good afternoon.
Yeah, good afternoon. Tell me your name and ask your question quickly, please. Hello, who said good afternoon? Ask your question, please. Hello? Okay, is there another question? I want to round up the session, please. Everybody should go and practice. But my problem with most of you is that you don't send in chats to the group. You discourage some of us that send chats. Some of you don't send chats. You are waiting for somebody to send chat for you. It's not okay. It's not fair like that. You have to be sending chat. And that is why some people up to today, they don't know how to analyze the market. Why? They are not trying at all. You have to try and make mistake and allow people to correct you. Okay? That is the only way, brothers and sisters. You have to try, make mistake. When I see it, I won't take my eye from it. I must correct you. I must correct you. If it takes 5 days that I discover that mistake, I must send the correction. Do you understand now? I must send the correction. So guys, keep sending chat. Keep sending chat. When I see you are sending chat, I'm encouraged to help. I'm encouraged to help you. Do you understand? In terms of chat analysis, forecasting, only very few groups anywhere in the world can beat us here. Only very few, if it exists. Because in every 10 analysis that we do here, 8 or 9 must play out according to what we say. We have spent a lot of time, years, analyzing the chart. So the experience is there. The experience is there. So if you are in a group where in every 10 analysis, 8 or 9 is fantastically correct, even going to the correction, every move, every step is stated and the market will follow it. If you are in a group and this happens, so why will you not take advantage? Why? Send in your setup. If it's wrong, we'll tell you it's wrong. If it's right, we'll tell you it's right. And many people will follow it. Okay? And if it's wrong, at the end of the day, we learn from it. That's how you learn. But for you not to send at all, it's a problem. It's not good at all. Please, just change. You know, I created a group to help people. And I discovered that it was only me that was sending chat there. Now, maybe next week, I'm going to delete the group. Because I consider people there are not too serious. Because I expect them to do more, they did not do more. How can I bring you to say I will offer my service for you free, and then you are not serious to act? Then I will go. So please don't leave the group cold. You know, I used to advertise. I used to pay money on Facebook to bring people to the group to come and learn. But now I don't do it anymore. I don't do it anymore. Whoever wants to improve himself in life should get up and do that. Whoever does not, should go and sit down. As for me, what I trade on the chart is okay for me for life. What I know here, if I don't go for any training for life, I'm okay. I'm done. Okay? But I am in a position to help. And when I want to help, I will help. When you want to take your training to the next level, you must pay. It can't be free, because I'm going to use my time. As I'm dropping from here, I'm jumping in for another session. It's a coaching session, one-on-one coaching session. Okay, those ones, they are taking my time, they must pay for it. And then I'm under obligation to teach them everything I know. But here is a free content. I'm not under obligation to show you everything. You have to get that clear. But at least I will show you the little one that I know will help you to improve. All right? So I see you next time. That will be next week by the grace of God. We'll do it again. I will try my best. Every little secret I know that is helping me, I will show you. All right? But you want to improve,
right. Hi,
you want to
Nathaniel,
grow. You say what?
I say hi before you log off. So I wanted you to advise on your what are you seeing on Nasdaq? Okay, my view is Nasdaq, NAS 100. So my view is that there's a short term sell, then we'll buy.
Okay, for quite some time I don't trade Nasdaq. Yes,
I understand.
With
yes.
what I'm saying, yes, but wait, before you think
there's
of
a three-way
sell,
move.
Before you think of sell. Okay. I'm going to end this session. Because the time is not there. I'll come back. I'll send a link. We all come back. Let's analyze the chart. Okay, for maybe another 15 minutes. All right. So we'll come back. Bye. I'll send this process, this video on YouTube for you guys to access. All right.
All right. Thank you.
Thank you.